Your $80,000 degree actually cost you $133,000. 67% of that debt is held by women, and forgiveness, under 3% approval rate. So in this video, I'm going to break down the real math behind student loan repayments, the effective rate they never show you, and that's the true cost of every repayment plan. And gang, also why waiting for forgiveness is not a financial strategy. Then I'm going to show you a real example. It's a nurse named Sarah. She was $80,000 in debt. She had a $78,000 salary. And I'm going to show you how she eliminated her loans in 6.8 years instead of 20. She saved $30,000 in interest and in the same period built over $120,000 in tax-free wealth. It's incredible. I'm Todd Schuhart. I'm a certified financial instructor, and you went into debt probably to help people in the career that you chose. It's now time for someone to help you. So let's get in and see these numbers. The student loan story. Same $80,000 degree, same debt. There are 3 paths to getting out of this debt, and only one builds wealth at the exact same time. So you earned it, that $80,000 degree, the degree you worked so hard for, the future you invested in. How you carry that debt moving forward, it changes everything. Most people know 2 options, but there's a third, and the math on the third option literally changes everything. So why is my balance barely moving is usually what we hear from most folks that are even years into their repayment plans. You have been making those payments every month on time for years. You check the balance and it's barely moved. You weren't imagining it. Most of your payment was taken before it ever touched your balance. This happens to every borrower, and nobody ever explains why. This isn't exclusive to student loan debt, by the way. This is literally anything that you're financing over time. So here's exactly where your money went. $80,000 loan, 6.5% APR, $598 monthly payment. Payment 1, follow the math. So step 1, lender takes their cut first. 80,000 times 6.5% divided by 12 months equals $433.33 of your $598 payment is going to the interest, not to the balance. It's gone before anything else happens. Step 2, your monthly payment. Loan calculator. So it's $80K at 6.5% by 240 months is a $598 payment. This is what leaves your account every month. Step 3, what actually reduced your debt? So $598 your monthly payment minus the $433.33 that goes to interest equals $164.67 of your $598 payment. This is the only part that actually counts. It's the only piece of this whole payment that's reducing your debt load. $433.33 divided by 598 equals 72% of payment 1 was interest. Not 6.5 like you would think, 6.5 cents on the dollar. It was 72 cents on every dollar you sent, the bank or the lender took as their profit. So in this, and they show you the 6.5% APR and the $598 a month payment. They never show you the 72 cents. That's the number that actually matters. It's called your effective interest rate. It's calculatable on every debt you have. Minimum payments, set it and forget it. And it feels like this is manageable, right? It's $0 in extra effort. $580 or $98 a month is gone. It's done. You don't even have to think about it. It's on auto pay. It's handled, right? No sacrifice, no changes, no thought. What nobody calculates is $63,520 paid to their lender above your $80,000 balance. So that $80,000 education just ran you $143,520. That is bonkers. Easy monthly, very expensive over 20 years. So $598 by 240 payments equals $143,520 total. You only borrowed 80 grand. The extra 63,520 is what is the set it and forget it actually is costing you. It's the privilege that you're paying to have borrowed that money and to set it up on auto payments for the next 20 years. Income-based repayment, it looks like relief, but it's not. $170,000 plus total cost, and that's before the tax bill. So a lower payment, it feels easier monthly, but interest keeps adding up. You can owe more over time. God, that's just so depressing. Forgiveness after 25 plus years. The forgiven amount, the IRS is gonna, they're putting taxes on that. It's income for you. You're not walking away scot-free. It's just not gonna happen. So your first payment, where it goes, don't forget the problem. 72% goes to the lender. 28% is going to your balance. Lower payments sound great until your balance is higher in 5 years than when you started out paying in the first place. It's like street money. Both paths have the same problem. Your money stops working. So what if your 80K didn't have to leave? $80,000 at a 5.5% compound interest for 20 years will net you $232,627 in tax-free money. So kill the debt, keep the money growing. This is the pivot, gang. This is the part where you really want to kind of lean in and listen. So here's the deal. Number one, you fund a policy designed for cash value. It's a whole life policy built to grow cash value, guaranteed growth every year. It doesn't matter what the market does, up, down, sideways, flat, you do not get affected by it whatsoever. Number two, you borrow against it, not from it. So you take a loan against the policy to pay your servicer or your 80K. Your 80K inside never moves. And it's still growing on the full amount. So it allows you to leverage against your 80,000 while also keeping your 80,000 in motion and growing for you. Number three, you pay it off faster on your schedule. So you redirect your $598 a month into repaying yourself, your own policy. And the debt will be gone in 6 to 8 years instead of 20. And the interest goes back to you. It grows in your favor, not in your lender's. And number four, your money never stopped growing. 20 years later, $232,627 in tax-free income inside your account. Your 80K was working for you the entire time. Remember, before we were talking $147,000 paid on an $80,000 loan. You're now reversing this, and we're making $232,000 on that 80K. It completely flips the script. It's the same debt 20 years later, right? So here's what we got. Minimum payments, $63K in interest. That's your net position. Total paid $143,520. The lender takes $63,520 as a thank you for lending you the money. The amount of wealth you've built in that process is net zero. The term, 20 years. Again, net is negative $63,525. You have lost almost 64 grand. The IBR forgiveness, $83,000. Net position. Total paid $170,000+. Balance can grow, meaning that you can owe more than you started with. IRS taxes the forgiven amount. Term is 25 plus years. Net loss, $83,000+. Neither of those seem like viable options to me. IBC leverage. So utilizing this structure, you'll be positive $152,000. That's your net gain. So debt gone, years 6 to 8. Interest saved, 35,000+, meaning you will pay 35,000+ less utilizing this plan than just doing your minimum payments. Cash value, $232,627. Term is done early. Your net capital, your net capital is $152,627. That's how much you've profited inside of a whole life plan by paying off your student loans. There is no other vehicle on this planet that I am aware of that will allow you to leverage your money, pay off your debts, and still profit tax-free at the exact same time. $296,147 gap between the worst and the best. Same debt, same degree, same starting line. This was never just about student loans, right, gang? This is send payments, money leaves, it stops growing forever. Option 2, extend the term, money leaves slower, still stops growing. And option 3, leverage it. Money stays growing, debt gone forever. So cars, trucks, boats, business equipment, real estate, every major purchase comes down to one question. Does your money stop working or does it keep growing? When you're ready for you to be debt-free date, the link is in the bio. The Wealth Health Academy will absolutely help you set and structure these plans, or if nothing else, walk you through it, show your debt-free date, and how you can leverage your money to make money in the process of becoming debt-free. So the only difference is whether you have 2 options or 3. And I am your third. So get with us. We'd love to walk you through it. Appreciate your time.